Oh, I need a clicker, don't I? Is there a pointer?
Yeah, the one on top.
All right, excellent. So just really quickly about Alpha Point, we're the world's premier enterprise platform for digital currency exchanges. My name is Scott, and I'm the VP of Worldwide Sales for the corporation. Just a quick shameless plug. We power over 20 exchanges in 15 countries, and in aggregate, they process about 350 million transactions a month. Real quick question. How many people today are not familiar with an exchange? What exchanges are, what they do? Okay, there's a couple. Great. So this will be useful for you. And for everybody else that's familiar with exchanges, we have some interesting statistics that you might find interesting. Okay, great. So just to start off, a little bit about the ecosystem. For the purposes of the presentation today, we organized it into four parts. So of course, it all starts with the mining. Miners create Bitcoin. They also maintain the network, which enables us to send Bitcoin to each other. Once you have a Bitcoin created, that's where exchanges come into play. So exchanges are the on-ramps and off-ramps to the Bitcoin highway. It's where you can buy and sell a Bitcoin. Exchanges are also price discovery mechanisms. If you want to know what the value of a Bitcoin is, you go to an exchange to discover that. So once you have created the Bitcoin, once you have purchased your Bitcoin, you then need to be able to store it and be able to use it. And that is the role of the wallets. These three pillars form the infrastructure of the Bitcoin environment. And from that infrastructure, you can then begin to build use cases. And so one of the most popular use cases we see is payment processing. And companies like BitPay have been very successful in the space. And it's quite obvious why. Merchants can accept Bitcoin and have a tremendous advantage and cost savings over legacy payment rails such as credit card companies. We also see some other interesting applications coming, such as change tip, which is micro payment processing and tipping, and a few others as well. Really appreciated the previous presentation where we talked about location-based services, LBS, that it took a while for the Ubers of the world to appear. And a lot of people, me personally, feel like that killer app is still yet to come. And the analogy always is, with the internet, it was email. It was email that made you want to be on the internet. And it made a lot of sense. It was so easy your grandmother can get it. Instead of creating a letter, stamping it, put it in the mail, you could just open up a computer, type it out, hit send, and it was instantly on the other side of the planet, and it was free. It made you want to be on the internet. And I feel like the application that makes you want to be on Bitcoin is still yet to come. And that's fantastic because there's still lots of opportunity out there for entrepreneurs. And it may take 6-7 years for the Uber of Bitcoin to appear. Okay, so I thought it'd be interesting to talk a little bit about where exchanges are historically from a volume perspective. Exchanges, live and die on volume. What I really like about this graph, probably the peaks are probably capturing your eye, but I like to look at this down here. So from like May until October, and then compare that year over year. A tremendous amount of year over year growth, and that's very strong. The numbers show that in 2013 there was 16 billion traded. In 2014, 37 billion traded, and I believe that will just continue to grow. Another way to look at this data is by exchange. So in the beginning, Mt. Gox dominated the market. It had all the volume. Then it became very difficult to get your money out of Mt. Gox, and people realized that, and they switched. So starting right here, it's kind of hard to see, isn't it? I believe that first one is BTC China. They were able to capture the lead for 1 quarter. Then it went to Hobei for 2 quarters. Then it went to OKCoin and Green for a single quarter. And then it flipped back to BTC China. So it's really hard to predict future volume and which one's going to be leading, and there really hasn't been a clear leader since Mt. Gox. Okay, I thought it'd be interesting to just share a little bit about how exchanges make money and some interesting data we came across you may or may not have seen. So exchanges make money by charging fees, and typically the fees are on transactions, and you can have all kinds of different transactions. You can have a deposit transaction, a withdrawal transaction. Actually creating an order is two transactions coming together, a buy and a sell, and then you can also have advanced instruments such as swaps. So what is typically the US dollar denominated exchanges such as Bitfinex, they'll charge a transaction fee on the orders that are placed. Many of the Asian exchanges do not. They charge fees on other things. So after Mt. Gox collapsed, there was some information that was leaked. And part of that information was a business plan. And in the business plan, they shared some revenue numbers, and we thought this was very interesting. So from January 2013 till October 2013, we were able to see what their revenues were and what the volume was. And from that, we were able to extract what percentage they were making per dollar going through the exchange. So then we took the previous 3 months and created an average. And with that, we knew what the volume was. And we were able to extract what the revenues were. So for November and December of 2013 and January and February of 2014, we were able to determine that they made about $11 million, $12 million just in November and December alone of 2013. And for the year on 2013, it was over 24 million, and then just for the first 2 months of 2014, it was about $3.5 million. Okay, so when I think of exchanges, I think of NASDAQ, Dow Jones, New York Stock Exchange. I think of the Chicago Mercantile Exchange, which is a commodity-based exchange. I think of Forex exchanges, right? So I think of Wall Street. So what can Wall Street bring to Bitcoin? Here are some statistics on some of these exchanges I just referenced. The Forex market is your foreign exchange between currencies. And that's not a typo. That's $5.3 trillion every day. In a single day, $5.3 trillion are exchanged on the Forex markets. It's a humongous amount of volume. The CME group, that is the Chicago Mercantile Exchange. That is the commodities exchange out of Chicago. That's where you trade oil, gold, sugar, coffee. And they are doing $2.5 trillion a day in trading. Compare that to the New York Stock Exchange, which focuses on equities and other instruments. That is $169 billion a day with a B, so quite a step down. And then you get to Bitcoin. And Bitcoin is at all of 32 million with an M a day. What I find interesting about this is that if any of this volume starts to trade over, you can see just a tremendous upside and what can be expected. If the Forex markets start to adopt Bitcoin and want to really engage with it, you can see that there's just so much potential there. And I think it'll happen. One of the things that drives volume on exchanges is the order types. And for traditional Bitcoin exchanges, primarily what is called a spot transaction is what drives the vast majority of volume and action on exchanges. But if you notice on the Forex exchange, it's all about foreign exchange swaps, which actually makes up 42%, which is even more than the spot transactions. So we believe that as Bitcoin exchanges mature and offer different kinds of instruments such as swaps, the volume will pick up as well. Now here is some data breaking down on where that Forex is being traded. So we see that 60% of the action is either in the UK, London, or the United States. What's interesting is that there are 50 countries with over 1 billion traded daily. So as Bitcoin is adopted by, or actually as exchanges move into other parts of the world, there's actually quite a bit of room to grow given that there's 50 countries with over $1 billion in daily Forex activity. So what does Wall Street need? What do the big players, the big institutions, what do they need to move into this space and adopt this technology? Well, they need certain types of products. What was that? I didn't catch that. A brain, yeah. So they need certain types of products that they're used to, and margin, futures, and options will certainly help with this. It's pretty easy to understand how margin works. You put in $5, you get 10 times that to trade. So having platforms that are sophisticated enough to allow for that will certainly help. And then order types. Primarily, most of the exchanges today are pretty basic order types, such as limit, market, stop loss, and trailing stop. But if you look at the NASDAQ alone, there's over 17 order types and 10 that are time force options. So traditional traders are used to having a lot of flexibility, a lot of sophisticated instruments and products in which to trade with. And Alpha Point's doing our part to help bring this enterprise level of functionality to the market. Okay, this is my final slide here. So some of the things that are also needed, and it's been talked a lot about today, primarily it has a lot to do with security. So I really like to think about this on two sides. One side is the business side, the other side is the technology side. So on the business side, with regards to security, custodial security, traders are very comfortable taking risk on the trades, the bets that they're placing. What they are not comfortable with is risking the collateral, the assets that they're actually putting into the market. They don't want to have any risk. They want to have zero risk on actually losing the collateral, the underlying asset. So a lot of companies, such as Jim and others, are really helping with this, with regards to custodial security, Bitcoin management, cash management, and regulatory clarity is another issue that we were actually talking about earlier today too. On the technology side, many of the hedge funds and exchanges and traders, institutional traders, there are protocols, standard protocols for machines to talk to machines. And one of the most standard protocols is fixed and binary protocols, and that is what is necessary to bring in additional traders from the technology side, and also advanced products, which we touched on earlier. And of course, just for the exchange itself, the underlying platform to have the high frequency trading capabilities. And again, we're doing our best to help with this part. And with that, thank you very much. I appreciate it. If anybody has any questions, Wall Street needs a brain.
Yeah, well, that's true. But everybody should know that. But the point is, you know, the way I look at things, and I like the models and the use cases that you put there, FTSE and NASDAQ don't touch cash.
Correct.
These exchanges are playing with cash, and they don't know what they're doing. And
Correct.
that seems to be a bit of a conflict of interest. Do you want to just touch upon what your feelings and viewpoints are on that?
How do I go back? I guess I'll go back like this.
Like the exchanges, the Bitcoin exchanges now they're trying to do everything. Whereas not even NASDAQ or FTSE touch actual cash.
Correct. I actually had a whole set of slides that I edited out on this. So maybe next time I'll include them. But what he's bringing up is the fact that in the traditional markets, there's a real separation of power, so to speak. The brokers actually communicate to the exchange. When you make a deposit, you don't actually deposit your money with a brokerage, you're actually depositing your money with a custodial account. And then there's the whole concept of clearing and settlement, who actually manages all of that. Today, in the Bitcoin world and a lot of these exchanges, it's a one-stop shop. They're managing everything. And so it's interesting you bring it up, and I did have some slides, but again, I did edit them out. I wasn't sure if this was the time or place to talk about them. But we see that moving in a particular direction, and we think it'll be good for everybody.
And then the high frequency, I don't see HFT fitting into this at all.
Why would you say that?
Just because of the network, and unless side chains can actually do it.
So keep in mind that what we do is we power centralized exchanges.
Fine. Okay, that makes sense.
Correct, yeah. And so just for everybody else, if you have a decentralized exchange, decentralized Bitcoin and all that, all these trades that I was referring to, they all happen off the blockchain. So everything is happening at the exchange level, and then when you withdraw your Bitcoin, that gets written to the block. So every time a trade happens on an exchange, it's not writing to the block. And sometimes people don't quite have that appreciation. I didn't have that appreciation when I first came to it. And with decentralized exchanges, if you make a trade, well then you got to wait for everything to reconcile before you can make another trade. So everything that we're talking about today is within the exchange itself, and that's where you get the high frequency trading systems. And so, like with our platform, we're trading at 1 million times a second. We can transact 1 million orders per second, and that's just impossible to do with a decentralized exchange. Good points.
Can you at least potentially hash those transactions and put the hash on the blockchain so that you have a verification of those?
Sure. So there's companies like Factum and others out there that is that what you're referring to?
Well, Factum is one implementation. Yeah, similar.
Sure. When our customers request that, I'm sure that we'll be able to facilitate that. And we're a technology company. We're not an exchange. Our clients are the actual exchange operators. They're the ones that actually deal with regulatory and compliance issues, banking relationships, capturing the market, and all that. So when they request that of us, I'm sure we'll be able to meet those needs.
Is 1 million the fastest you can do?
No. Version 2, which we actually developed in line for Bitfinex, they're, again, largest BTC to USD exchange on the planet. They had some advanced order types that was necessary. Version 1 of our platform only did market limit orders only. So we captured a certain segment of the market and then grew from there. What was really cool is that version 2 of our platform, not only did we get more sophisticated with our order types, because we went from 2 to, I don't know how many we're doing next, with like say 12. We also went back and optimized parts of the code, and I've overheard the founder of Alpha Point, Joe Ventura, talking numbers of maybe 1.5, 1.6 million transactions per second. So not only did we become more sophisticated, we also increased the performance simultaneously, which is a real testament to my team. We're very fortunate to be on the team that I am, because they're much better and brighter than I am, that's for sure. Cool. All right. Well, thank you, everybody. Appreciate it.
Okay, I want to make a quick announcement. Just want to let you know, dinner tonight, 40 mil of Bitcoin, but you can